Good one as well.
Okay. Okay. So tell me, what is your problem? I'm sharing the question. Tell me. Okay, tell me.
So the first transaction, I don't know how to write it.
This one?
Yeah.
Okay. But I told you that you have to solve only this question and the 14th and 15th. The third one I didn't tell you to solve because we have discussed only closing entry and transfer entries.
Oh, I did the first two.
Okay. So the third one is adjustment entry and this rectification entry. This is actually we will discuss this topic in a separate chapter, rectification of error. Okay. So we have already covered opening entries. We have covered closing entries or transfer entries. And this third one, adjustment entry, we have not completed it yet. So actually in journal, we have solved many questions like this, but right now we have not covered it. So this is adjustment entry we are going to discuss. Okay, first of all, before discussing this, what are the meaning of this adjustment entry? Uh, what are the adjustment entries? First of all, if I tell you that we have to pay salary, okay, so what will be the entry for salary? Salary paid.
Cash account to salary account.
Think about it once again. Apply the rule and then tell me the journal entry. The journal entry rule.
Salary paid account to cash account.
It is simply salary account debit to cash. In the beginning, you said cash account debit to salary. Salary is an expenses. So expenses is written on the debit side and cash is going from the business. That's why cash will be on the credit side. Okay. Now, if we receive commission or interest, let's say interest. So we have like invested money in bank, we have deposited money in a fixed deposit and on regular basis they pay the interest. So if we receive interest, it will be cash account debit to interest account, interest received. Okay. Is this okay?
Yes, sir.
Okay. Now, tell me if salary is not paid, salary is expenses. So if it is not paid, means like the employee worked for a month. Now the time is payment of salary, and we have not paid the salary yet. So there is salary due, you can say. So tell me, what is it? If salary we will not pay, what will it become?
Uh,
It will become a liability. So it will not replace the salary. There is a separate account created due to this, which is salary payable account or outstanding salary account. Is that here?
yes, sir.
No?
It's clear.
Okay. So salary is expenses. It should be written on the debit side. So it will be written in the same manner as we have written here. Because either it is paid or not, we have to record the entry because salary is due. The work is already complete, so we have to pay the salary now. So salary will be recorded on the debit side. So salary account debit. Two. Now here, the second item created because we have not paid the salary, so it becomes a liability now. So to salary payable or salary outstanding. Okay. So salary account debit to salary payable account. In the same manner, if we have to receive the interest receivable, and we have not received it. Not received it. So what will happen now? It will become an asset. Interest is income here, and income not received on time. So it will become the asset. It means in future, either we will receive the money. Yes.
Yes, sir.
So it will become an asset, and then it will be recorded like accrued interest. It will be called accrued interest account debit because interest is on the credit side. So it will be on the same side to interest. Accrued interest is an asset. Okay. So you can see the question here. Interest accrued, it is written 2005. So we have to write the entry like interest accrued account debit to interest account 2005. Then wages for March 2020, outstanding 10,000. So wages account debit to outstanding wages account. Insurance prepaid. Okay, so we have covered the outstanding part. Now the prepaid part. Advance payment. Advance payment of expenses. Now, first of all, if the expenses is not incurred yet, let's say it is starting of the month and we have paid the salary already because employee had some work. He told me that he has some family or work, so I have paid the salary to in advance. He has not completed his work for the month, but I have paid the salary in advance. So in that case, salary will not be recorded as expenses because salary is not incurred yet. After he has completed his work, then the salary will be recorded. Is that clear?
Yes, sir.
So that's why salary. If advance payment of expenses, let's say salary we have paid. So paid means cash is going. So to cash account. And on the debit side, it will be advance salary or prepaid salary. Okay. So this is again an asset, because if you have already paid money in advance, then you don't have to pay after completion of the month, because you have already paid in advance. Now, in return, what you will get, either that employee will pay you the money back, or that employee will work for you for a month. Yes.
Yes, sir.
So that's why it is an asset, and we will record it like this: advance salary account. Also, sometime we also received income, advance income. So advance income is a liability. And if we have received it, advance income or received, it means we have received either cash or bank. So cash account debit to advance income. So asset is on the debit side, liability is the credit side. Is that clear? So these are the main 4 entries for adjustment made. There are some others like depreciation, bad dates, these provision for bad dates. So these are also adjustment entry. Now, provision for doubtful debts. So if you have doubt that some of the money you have given to someone will not be received, then it is a loss. So loss should be recorded on the debit side. And this loss will be deducted from the amount receivable from debtors. So to debtors. Okay. So provision for doubtful debts accountable to debtors. So these are the entries we have to record. Now, one by one, I'm writing the entry. I've explained the concept. Tell me if you have any doubt in any of these items. So for outstanding expenses, it is expenses account debit to outstanding expenses. Then the second entry for advance payment of expenses. So it will be advance expenses account debit to cash. Just 1 minute. Okay. So entry number 3 for accrued it will be like accrued income account debit to income. Then entry number 4 for advance income. So for advance, sorry, actually, so for advance income, it is cash account debit to advance income to advance for advance income, it is cash account debit to advance income account. So please write these 4 entries. The heading will be adjustment entries. Actually, we need to write the meaning also. Adjustment entries are the entries which are recorded to which are recorded for some omitted items. Omitted items at the end of the year. So at the end of the year, there are some items which we generally have not recorded because outstanding expenses, prepaid expenses, these are like items which is not adjusted in the account. So these are adjusted at the time of final account that we prepare. So at that time, these entries are passed. So that's why adjustment entries are the entries which are recorded for some omitted items at the end of the year. So this is the heading, adjustment entries, and then right from here.
So can you scroll down? Can you scroll down?
Done.
Yeah, I'm done.
Okay, so these are the adjustment entry. Now, can you solve this question? Interest accrued 2,500, wages for the month 2020, outstanding 10,000, insurance prepaid 1,500. These three transactions are very simple. But after that, there are two more transactions. Commission due to manager 6% on net profit after charging such commission. The profit before charging such commission was 1,06,000. That will be difficult. Okay, past three entries, and after that, tell me, I will explain these two. Okay, let me explain, then you'll solve all of these. Okay, so commission due to manager 6% on net profit after charging such commission. First of all, do you know the concept where we don't have the value, so we assume like X, something as X? Yes?
Yes, sir.
Okay. Now, it is written, there are two options for this, like manager commission. It will be used in some of the future concepts also. So manager commission. Now, what is manager commission? So it can be calculated on profit um, profit before charging such commission. On profit before charging such commission, and there is on profit after charging such commission. On profit after charging such commission. So one is before charging such commission, the second is after charging such commission. First of all, if you don't know the commission, how can you calculate profit after charging commission? Because in first case, it is to be calculated on profit before charging such commission, means whatever profit you have calculated, you will just multiply the percentage. So here commission equals to profit before commission multiplied by rate by 100. Now the second is commission equals to profit before commission. We have to use before commission here also, but the formula will be different. To understand this, it will be rate by 100 plus rate. Okay, so this is the formula we have to use. Now, we have to understand how we are writing 100 plus rate. Generally, in percentages calculation, we write 100 as denominator. So why we are writing 100 plus rate? So to explain this, you have to understand that if you don't have commission, you don't know the commission here in this question, because question saying that we have to calculate commission on profit after charging such commission. Now, we also don't know the profit after commission. Because if we don't know the commission, then what you will deduct from profit so that you will get profit after commission. So that is also not known. What is known here is profit before commission. Profit before commission. It is known. It is given in the question. It is 1,06,000. Now tell me, if we have profit before commission, then from this we have to deduct commission. So minus commission, whatever it is, then we will get profit after commission. Yes or no? Is that clear to you?
Yes, sir.
Yes. So now it is difficult because we don't know the commission, we don't know the profit after commission. Yes. So how it will be calculated? If we just multiply the 5% on 1,06,000, then it is incorrect. Why incorrect? Because that is profit before commission, not after commission. Okay.
Okay.
So it is profit before commission given, not after commission. So if we multiply with the 1,06,000, then it will be incorrect. So that's why what we have to do, we can do one thing. Assume profit after commission as whatever you want, let's say 100, or you can assume X. So if your profit after commission is 100, then commission will be 100 into 6% in the quotient is 6%. So 100 into 6%, it will be 6. So total of these two, because from profit before commission, if you deduct commission, then you get profit after commission. So we can say that in profit after commission, if you add commission, then you'll get profit before commission. So 100 plus 6, 106. This is your profit before commission. Yes or no?
Yes, sir.
So if we take this as percentage form, so your profit after commission is 100%, your commission is 6%, and your profit before commission is 106%. Now, as per the formula, profit before commission is given in the quotient 1,06,000 into rate is 6% divided by 100 plus rate, that is also 106. 100 plus rate means 100 plus 6, it will be 106. So that is what we get here. Yes.
Yes.
So one of the method is this 1,06,000 into 6 divided by 106. It will be 6,000. Is this clear?
Yes.
Or, or should I use another method? Because if you understand one method, then it is better to stick to that. But if you have confusion, because this is a little bit confusing part, yes, commission. So if you don't understand, I will teach you the second method. So don't be don't hesitate in asking question. Like if you are saying, sir, yes, I understood. But if you have not understood and I will leave this concept, then it will again make some problem in the financial statement chapter. Thinking, should I say yes?
Can you show the other method?
Yes, the other method is like assuming X. So assume profit after commission as X. So if profit after commission is X, can you tell me what will be the commission? It is 6% of profit after commission. So you can write X into 6%. Yes.
Yes.
So what it will be 0.06X. Now profit before commission equals to or profit before commission minus commission equals to profit after commission. This part is clear?
Yes, sir.
No. So in this part, two of these two, like commission, we have assumed 0.06x and profit after commission, we have assumed x. But profit before commission is given in the question. That is 1,06,000 minus commission 0.06x equals to x. Is that clear?
Yes.
So 1,06,000 equals to x, and if it will go on the x side, what it will be? If 0.06x will go on the right hand side, how it will be written? Mandy, how it will be written?
X plus 0.0.
Very plus 0.06x. So total will be as 1.06x and here 1,06,000. So x equals to 1,06,000 divided by 1.06. So it will be 1 lakh. Your X is completed. X means profit after commission. Now, after it is calculated, we can calculate commission on this amount. So commission equals to 1 lakh into 6 by 100. So 6,000. Now tell me which method you like the most. Actually, this percentage part calculation, this is also like easy one. Like 106% I have written. So it 106,000 is given. So divided by 106%. So 6% means if you remove the percentage, 200. So it is 1 lakh. And then you can calculate commission on this. Same thing we have calculated here. So which one do you think is better? The 100 one or the X one?
The second one is right.
Okay. And the third one is the better one. When you remember the formula, profit before commission into rate by 100 plus rate, 1,06,000 into 6 divided by 106, 6,000. It is more simple. Yes.
Yes.
So this is the third one actually, the formula, which formula is given here, but how this formula is created, that's why I have explained these two parts. This is how it is created. 106, how it comes. So 106, you can see here, 1.06, that is also the same thing. So 106. So this is the formula. Please write these two formula. Actually, this topic generally we discuss in profit balance sheet chapter, final account, or financial statement, you can say. But it is given here, so I have explained it here. So this is only one calculation part in that question, actually. Tell me after you have completed. Done?
1 minute. But can you scroll down?
That's it. There is nothing left. Only formula you have tried. All the part of X and 100, it is just for explanation purpose. You can simply use the formula and get the answer.
Oh, I'm done.
Okay. Profit before commission into rate by 100% rate. Now, this we apply in the question here. Commission due to manager 6% on net profit after charging such commission. It's clearly written after. So 1,06,000 into 6 by 106, it will be 6,000. So what will be the journal entry? Manager commission is expenses for the business. So you have to write manager commission account debit to outstanding manager commission because that is also due, not paid. So outstanding. Next is interest due on loan but not paid. Loan of 150,000 was taken at 9% per annum. 9 months before end of the year. So we have used only for 9 months the loan. So 1,50,000 into 9% into 9 by 12. This is how we have to calculate. 9 by 12 we have to use. So after you have calculated the interest, it will be interest on loan account debit to loan account. Okay. Is that clear?
Let's see.
Okay. Now, can you solve this question number 16, so that this chapter will be complete over? Okay. One more thing before solving this question. You have completed the question number 15.
Yeah.
Okay. Can you tell me what the journal entries you have written?
Uh, uh, the first one, trading account to profit and loss account.
Okay.
Then second, profit and loss account to capital account.
Okay.
Third one, capital account. I'm not sure. It's to drawings account.
Okay. So generally drawing is written on the like drawing account debit to cash. So drawing is again deducted from the capital. So you can write drawing capital account debit to drawing.
Then cash account to purchase account and
No,
sales
no.
account.
Purchase return of 7,000. What you have written?
Cash account to purchase account.
No, not correct. It
Purchase
will be
return.
purchase return account.
Yeah, purchase return.
Yes. And then sales return to
Sales
cash.
return account to cash.
Yes, generally in purchase return, sales return, we use like this purchase return and sales return. These entries are written in purchase return book or sales return book. So it is not written in purchase proper journal. Okay, journal entry we have discussed, but it will not be recorded in proper journal. So first three entries will be recorded.
Yeah.
Okay, so second two, it will not be recorded in proper journal book because these are recorded in separate book. Purchase return, there is a separate book. Sales return, there is a separate book. So in that it will be recorded. Okay, so we don't have to pass any entry for fourth and fifth.
Okay.
Okay, now solve question number 16.
So I should cut that off, the fourth and fifth.
Yes, yes. So you have to solve question number 16 and tell me after you have completed it. If you have any doubt in understanding any part, you can again ask question.
So the first one would be interest secured account to interest account.
Yes. Done.
Yeah, sir.
Okay. Tell me the journal entries.
The first one, accrued interest account to interest account.
Interest accrued account debit to interest account.
Yeah.
Yes.
Second, wages account to wages outstanding account.
Good.
Then insurance prepaid account to insurance account.
That is not correct. Okay. What entry you have written? I have just written some entries uh, like for prepaid expenses. Can you tell me that?
Or
The prepaid expenses, advance payment of expenses.
advance expenses account to cash account. Oh.
So that is what it is. Prepaid insurance account debit to cash.
Um, then wages of wait, sorry. Manages manages commission account to manager commission payable account.
Payable or outstanding, you can write.
The last one, interest due to loan account and to outstanding interest due.
No, no.
Sorry.
Here it will be interest on loan account debit to loan account, because if you not pay the interest on loan, then it is added to the loan amount. So that's why on the credit side, loan account will. So it will be interest on loan account debit to loan account. And what will be the amount?
I got 10,000 10,125.
10,125. Okay, 13,000.
1 minute, I think I made a mistake.
It's yes, it is correct. 10,001.
Okay, okay.
Done.
Yeah, I'm done.
Okay. So this is our chapter of like subdivision of journal, subsidiary book, or special purpose. This is it. Now, I will explain some part of rectification also. Like, what is rectification? What do you understand by word rectification? Can you tell me that?
Sure.
Okay, rectification means correction of any incorrect entries. Actually, rectification entries means correction of any incorrect entry to passing journal entry. So that is called rectification entry. Or if you actually, in some of the cases, we will not pass any entry because it cannot be passed. So that's why that is also, if you have to write 1 line or 2 line for rectification, then that is also rectification entries. Now, first of all, we try to correct the error at different stage. Okay, so after journal, maybe we will try to rectify the entry. After ledger, after trial balance, or after final account, we will try to rectify the entries. Okay, now there are four types of error that I told you about. Do you remember?
Uh, no.
Okay, you need to revise the concept. It is like you forget everything after some time. You don't remember the some concept of journal, you don't remember some concept of ledger, then trial balance, everything. So you need proper revision of the topics. Please do it. That is important because your 12 marks depends on it. Okay, is that clear? Okay, so I have told you about types of error. There are four types of error. One is called error of principle. Then second is error of commission. Then the third is error of omission. And the fourth one is compensatory errors. Okay, one more thing. We will complete this, but tell me, after this, we have completed journal, we have completed accounting, equation, ledger, trial balance also.
Yes, sir.
We we have completed trial balance one week.
Yes, sir.
Okay. Then subsidiary book we have also completed. So which chapter you want me to start?
Can you do theory-based chapters?
That we have done the starting, the theory base of accounting.
There are other ones too.
Okay, the revenue and capital expenditure, provision and reserve type.
I'm not sure because I'm on vacation now, so like I don't know what's the next chapter.
Okay, there are actually many practical chapters, and there is two, three chapters which are only theory. So one of them is capital and revenue expenditure. The second one is like provision and reserves. The practical chapter that is left is like accounting for bills of exchange, trial balance, depreciation, bank reconciliation statement, and final account, single entry system. These topics are still left. So we should start the theory base, theory chapter only. Okay, after this, we will complete two theory chapter that is in the syllabus. Yes, there is expenditure and income chapter and provision. That's only two chapters. There will be any third one. I will see the book. Okay. So tell me, do you remember the meaning of these at least? Because you don't know the name, but once we see the name, then we sometimes remember theory part. Do you remember the meaning?
No.
No? Okay. So error of principle. Principle means like the rules that we follow for accounting purpose. If there is any mistake related to the rules, then it is called error of principle. Like we have to record. I told you that if we purchase any asset and there is any installation expenses, then it is also added to the expenses. Yes. Yes. So it is also added to the, sorry, assets account. So in the asset value we add. So let's say that we have purchased a machine of 40,000 and we have paid 5,000 for its installation. So total cost of machine will be 45,000. It will be recorded machine account debit to cash 45,000. Okay. Is that clear?
Yes, sir.
So when we record this installation expenses as a different expenses, we don't include it in machinery, then it is error of rules. So it is called error of principle. The second one is error of commission. Error of omission, first we will understand. Error of omission means like while passing any entry, while posting it to the ledger, or while recording in the trial balance, we leave some entries. Like if we have not recorded any journal entry, if we have leave some part of journal entry in posting ledger, so that is called error of omission. Means we have not written any entry for that, or we have written some part of it. So it is called full omission or partial omission. So that is error of omission. After that, error of commission. Error of commission means like error related to the amounts. If we have to write 450 in a transaction and instead of 450 we write 4500, or we write 45 only, so this is called error of commission. Okay. In the same manner, if we are writing, let's say 5,000 and instead of 5,000 we have written only 500, or we have written 50,000, so that is also error of commission. So if you make any mistake related to the amount, then it is called error of commission. Is that clear?
Yes, sir.
Okay. The last one is compensatory errors. Compensatory errors can be anything, but the main focus of this error is that it set off the error previously made. So if there is one error, actually in compensatory errors, there are always two errors at least, because one error will